August the 19th. It's a Tuesday. It is about 11 minutes after 12 in the afternoon. And we're here with another edition of Chart the Markets with our good friends from FEG Token. You can visit them at fegtoken.com and smartdefi.com. And yes, our exchange partners at BYDFi. And the link to BYDFi, which is a no KYC sign up, is available on my X profile and of course on YouTube under the description at Blunhouse TA. You'll find me, and of course you'll find all those videos that we do week in, week out there for your review as well. You can watch them anytime, and please feel free to like and subscribe. So now that the housekeeping is done, let's get into the fun stuff. We are living in interesting times, and one of the things that goes along with living in times like this, and this is just my opinion, there's no science here, but we will have a tendency to almost overanalyze what's going on around us, and we get lost in information that may or may not be relevant to us. Now, people are going to have different opinions. As someone who considers themselves to be more of a technician than a fundamentalist, I'm going to have a perspective that might differ from someone else. And I understand that and appreciate it. And everyone is we do things our own way. But I believe that the market discounts everything. Everything that we need to see is on our charts. And one of the biggest mistakes or pitfalls that is out there is not focusing on what's on the chart in a very responsible professional way, even as an amateur trader, someone who's not professional or who does this to earn their living. What goes on in a chart is really all we need to know. Charts don't lie. This is a real-time representation of what money is doing, not what people are saying. The what people are saying is where we get lost in the weeds. Is some of it educational and useful? Yes. But is a lot of it so macro and so hypothetical that you can't begin or start to use it to base trades on? Even medium-term trades, especially now. Thus the importance of being able to read price on a chart. Understanding what money is doing and not what people are saying. Because these are the times you don't want to make mistakes. And if you are going to make a mistake, you're going to mitigate the risk. You're going to run tight stops. You're going to be very, very conscious of position size and leverage and so on and so forth. Everything that we do here, we talk about it every week, that current price revisits past. Break one level, find the next. And those levels can be what? They can be major moving averages. They can be areas or benches of past price, which would be representative of consolidation. They could be VWAPs, the point of control, the upper value range on the volume profile. All of those things are going to be used as targets and draws for price either up or down. And one of the things that we do here is that we'll use trend lines, and we like to identify levels when we can, and we leave these lines on our charts, right? So what we're looking at here is just this simple daily chart of Bitcoin, and I mean bare naked is all that's on here is candlesticks. And looking at the candlesticks tells us a little bit of what's going on, and there are some people that will be able to trade just on what they see on their chart, and that's great. That's their methodology. But if we go back to this chart, which is the actual chart that we've been using for Bitcoin for quite a while, these levels that we put here at our earliest opportunity, where we would say, hey, we can connect these levels. We can see, hey, this is a consolidation area, right? We're splitting all of this. Perhaps that's going to be support and resistance at some point in time, and lo and behold, it is, right? We've done the same thing up top here. And for those of you that have been around for the last few weeks, when these lines went on here, you'll remember us dropping them in. Are they going to be pin the tail on the donkey perfect? No. They're not intended to be. They're there to help us create ranges, because this is not a perfect science, right? We're throwing these things here looking to connect areas that in the future might be areas of support and resistance, or maybe they'll box in a range for us. And you can see on this chart that, you know what, we're pretty darn accurate about the levels that we selected that might become relevant in the future. And that's why we put them here early, so that we can use them later on. Because one of the things that we like to be able to do with some precision, if we could, is just box in price, right? We know current price will revisit past, and within those areas will be ranges, and that we can start to trade within those ranges with some confidence, and then be able to use them as areas of support and resistance as well. And this is only showing the candlesticks and these ranges that we've put on our chart. Now, one of the other simple tools that we use really quick is a volume profile. And what we're doing is layering and giving you the ability to create checks and balances to verify and validate where you believe price is going. So as we moved up, and this was a very organized wave, by the way, it wasn't too crazy. Nice move up, sideways, nice move up, sideways, nice move up, same thing. And the breakdown, quite honestly, was also just as organized. But when we add a volume profile, what can we learn? What can we use additionally to help us understand what might be happening next? Because we know that when price changes direction, it's looking for past price. Well, we can see how it was looking for these levels. We knew that this volume gap was here. It's right there for us to see. And we know that when you have a failed breakout, what will happen is you'll roll over and current price will look to take out the previous wave's low. That's what we're working on right now. Knowing that our volume gap is there, do you feel more confident thinking that perhaps it will take out that low? Yeah, I kind of would. We've already identified a level that looks quite respectable for support and resistance, which, knowing that the upper value range for the volume profile is sitting in here, would make this a legitimate target. And how long, and you can continue to see if you break that level, then there's the point of control, there's the lower value range. But it's just layer on some very simple things. Be aware of levels when you see them, identify them if you can, because chances are you're going to come back to them in the future and you're going to be glad they're there, because it will just help you identify what is going on, especially when things are volatile. Now, just to add on one extra little level of certainty, and again, this is the simple stuff, right? So what are we trying to do? It's a crazy world. We're hearing that the sky's falling. The Nasdaq's down a couple hundred points. The markets are so overbought. All of this stuff is true. But in your head, it can't do you any good. It just rattles around in there and echoes and creates more questions than it does answers. So what we've done now is we've just simply layered on our base script, which is giving us safe entry signals long and safe entry signals short. That's what it does. So when we see these big candles up here and we see these equal tops, and we see how the short-term 5 EMA points out like that, what's that tell us? That's representing velocity down. It's literally the sucking sound of money leaving. That does that. And in the process, the velocity of this candle would drag the shorter term 5 EMA down through the T line. One of the things that, for me, will trigger a signal. Now, as soon as you see this divergence, you see it here real quick, right? When you have big changes in price and you create those points, you're going to see that divergence pointing down quite quickly, and you're in all likelihood going to short there and try and short it early. You have the big impulse candle down, you go sideways. What does it mean when you go sideways and you don't have really any push above and you keep closing below? What does that mean? It means you're still bearish. We see it every single week on all of these different time frames, and here it is on the daily Bitcoin chart. Right? So no one can say they were surprised. Right? And our thesis about where price is going is only good until money comes in or leaves to change it. And that's okay, because we're traders. We don't care. We understand that things don't go straight up and things don't go straight down. That's all part of the process. And we recognize that just creates more opportunity for us. That's all. Look to take out the previous wave's low. Look for the weakness in past price. What do we talk about when you can get into these volume gaps that price can fade pretty quick because there's nothing there previously substantive to hold it up? We show it all the time. But let's just, for example, add another layer. Here's the 20. Now, do we like support of major moving averages when we're moving up? Yeah. What does it mean when we break them? Maybe things are changing. There's your confirmed entry to go short right on this doji. You didn't miss anything at all. You just paid some insurance to make sure that you're on the right side of the trade. And there you go. Simple, simple, simple stuff. Right? It doesn't need to get any more complicated than we make it. It's as simple or as complicated as we make this. It sounds like a lot, but honestly, do it a few times and you're like, there's actually something to this. We had more than enough to tell us that this was going to fade. You have no idea what comes after the current candle, right? You didn't know what was after this particular candle. You have no clue. All you know is it looks like a shortable situation. And it was. There's your signal. You could have waited, and that's fine. And that would be totally appropriate because you're seeing support here of the 20. Right? I totally get why somebody would want to wait. This could bounce off the 20 and shoot higher and start to look for the previous wave's high. Right? It's completely understandable. But you get a sell signal, so you know what? You're just going to do what you're told. The divergence that we talk about opens up and price falls. Now you're ahead of the game. And we know that because we break one level, we're looking for the next. And the next level, if we throw it up here, is going to be the 200 MA. It's down here, and let's throw the 100. Maybe we're looking for this. And it's just a process. It's the anatomy of a breakout or a breakdown. And when you understand what's going on the chart, you're not surprised. And when you're not surprised, you don't panic. And the not panicking part is really key. Right? It's really key. Because when you panic, you probably make mistakes. You do make mistakes. If I panic, I make mistakes. But everything that we need to know was on our chart. And if we look at, just as an example, this is the NASDAQ 100, and it's the futures chart. So here we have a big red candle today. And everybody's screaming about it. And everybody's talking about it. And everybody's trying to chart it and figure out what it means. I don't know. But if you block all of that stuff out, if we're looking for an entry off this daily chart, if we believe that this is an overly extended move higher, and we're starting to look for opportunities on this daily chart to go short, as an example, what are we going to do? We're going to try and sneak an entry in on a smaller time frame. $2 a.m. Friday the 15th. 2 a.m. So since 2 a.m. on Friday morning, the NASDAQ 100 has been in a confirmed downtrend since Friday. Today's Tuesday. So you had a whole day Friday, all of yesterday, and all of today before people like, oh man, we have a problem. Something's going on. No. If your head is too full with stuff that is not important, and yes, that's a subjective thing, but if you're spending all of your time talking about, markets without spending time educating yourself and, making it a profession on how to read price on a chart, you're missing out. Right? You're missing out. We were given a clean signal at 2 a.m. on Friday morning to short this market. And if you would have shorted this market, do you think that today you'd be worried about what's going on? No, because you were in it 3 days ago. Quietly, all amongst yourselves, you didn't have to shout it off from the rooftops, is all that you needed to know, as that you were in this trade long before everybody else was, is because you did what the market told you to do, because you understand it's a language, a real-time representation of what money is doing and not what people are saying. All the other stuff is just BS. Relevant? Yeah, sometimes. Do I chart macro things? Yeah, sure I do, because I have a macro overview of what's going on in markets, sure. But at the end of the day, the chart is going to tell us everything that we need to know. This is DXY. This is the US dollar chart, or US dollar index. These are levels that have been here for quite some time. Just levels that I've drawn to try and box in chart price to give me a range to trade in. Does this chart look like it wants to be bullish? Are we waiting for a clear signal on the daily? Let's see what the 4-hour tells us. See if we can steal a look. Because if we're going to see it early, we're going to see it here. There it is. 5 a.m. on the 18th, which is yesterday. You got a buy signal on DXY. And even though you had these two red candles, did they change trend? No, they didn't. Did you get a sell signal in here? Nope. Not on the 4-hour. Now what's happening? Well, price is trying to do what? It's trying to take out the previous wave's high. Just like we showed on Bitcoin. And when it takes this one, what is it going to look for? It's going to look for the next one, and so on, and so on, and so on. And again, nothing's going to go straight up. This is a process. And the process includes retracements, where you get a chance to kind of gas up and take another run or collapse altogether. But everything that we need to know is on here. And this is the beauty of this script, because it gives you an advanced look into what might be going on. So do I see this daily candle hoping to catch a bid, get a signal, and do what? Take out this wave's high? Yeah, I am. That's what I'd be excited for if I wanted it to go higher. And knowing that you already have that signal on the 4-hour chart, well, you're already in the trade and you're already up on it. And again, this could be anything. Absolutely anything. We use the same methodology on oil, right? You know, here's an example. The first chance you had to, or I had to draw that trend line, I used it because it may or may not be relevant in the future. And I actually think it was relevant in the future. To the penny? No. But the important part was the target. In the event of a breakdown, this thing was going to look for a previous price. That's how she works. There's nothing else on this chart but the T line and the 5 AMA and of course the trend line. And the analysis was that if it was going to continue to break down and repeatedly fail, it would eventually end up at a certain point. That certain point was $61.66. Hey, where are we? Where were we yesterday? Right back there again. Simply the anatomy of a breakdown or a breakout. Everything that you need to know is on your chart. Whether you use it or not is up to you. And it doesn't matter what you're trading. Let's look at XRP. This is the weekly. Let's go to the daily. Do you remember we dropped this trend line in on XRP last week? Wondering, hey, it may or may not be relevant. I kind of think it's relevant. Does it mean the sky's falling and that, you know, it's the end of the world? No. What it means is that this was a super hot run up and everything comes to an eventual end. Nothing goes straight up, nothing goes straight down. And eventually, price was going to take a rest. Now, just pretend that trend line's not there for a second. What do you see on this candle? Here's your doji candle at the top of a move higher, when lo and behold, you point out and you start to show this. Right? This is a daily chart. It doesn't matter if you're in here or if you're in when you get your signal. This is the insurance anyways. This just gives us this red fade here, just gives us a little bit of a heads up that something might be coming. Right? And there you go, all over again, the divergence that we talk about, right? The relevance of that trend line. You get a buy signal and you can see where it kind of fades. You test it again. If you look at it on the weekly, it'll look even more organized. What do you think price is looking for? This is the weekly chart. Definitely want to hold the T line, but if you don't and you start to break it, price will come down and look for the previous wave's low until more money comes in to change that. And if we throw again our volume profile on the chart, hopefully it's going to show us some big, come on, load up. No? Let's go to the daily. There we go. Now that we know the volume profiles here, since we've added it and we see this big gap, does this candle look more ominous now than it did before? Right. It's pretty clear where it most likely wants to fall into. And that previous wave's low is right in here. Does it mean this is a bad asset? No. Does it mean that the world's over for XRP? No, of course not. This is just how price moves. No matter what you think or where it should be, this is just how price moves. Here you broke the 20 and got a sell signal all in one candle. That's not good. Here we've broken the 50. We broke one level. We find the next. This candle literally wicks it. This one wants nothing to do with it. What happened here? Right? Came down. You tested the 50. You actually bounced a little bit. And what did you do? You tested the T line. You wicked it. And then the thing just collapsed. And it's relevant because in order for it to mean something, you want it to break the T line. And it did the opposite of that. It kissed it and ran away like a scared cat. Breaking the 50 at the same time, making me believe that it probably wants those previous candles, which are in that volume gap. And if that happens, what else is down here? The point of control in the 200 MA. The point of control is where buyers and sellers and the volume is all accumulated over the last 200 candles on the volume profile. That's what it's representing. Right? Think of it as that place where buyers and sellers have shaken hands in the past. And price is attracted to those levels. It's a safe place to go in the event of a downtrend. And this big gap will make it easier to get there. And this happens time and time and time again. Right, on everything that we look at. Let's look at ETH because this thing has had a really nice run. Right. Because all that's on there is you got your volume profile, and here's your point of control. This is a level that we've obviously put here for a reason, which seems to be in line with the upper value range. This is very light trading. Right, there's not a lot up here. So what do we know about that? Well, as price changes direction and comes back to test, there's not a lot to hold it up. So it can fall quickly. And here we go. What do you think it's looking for? It's looking for the 20. Right? It'll look for the 20. We either get support from it. You know, you can come back and tag the 20 and get a continuation.
Do what?
And then price will start to look for.
I didn't hear what you said.
The previous wave's high.
I'm on base. I have a thing in my ear as well. That's what I'm trying to.
Or we've got the 50.
You should take the bottle.
Which is below it.
Oh my God! Yes.
We got the 200. Right back here with the point of control. So
yeah,
you can see all of this past price, which current price will be drawn to. So here's our first test of the 20. You get a little love and you kick higher. You're going to come back and test it. Will this be the first test? No. So we have to be aware that we could get a breakdown.
So what? You got it.
Of the 20.
The same way you do it
without
that,
it. Then you lose the 50. So someone's got a hot mic. And so on and so on. But we can't say that we were surprised. Like we can never say, oh wow, you wake up one day and ETH is like $2,500. How did that happen? Well, slowly at first and then really, really, really fast. Just break one level, find the next. If you don't hold the 20, you're going to look to the 50. If you don't hold the 50, you look to the next layer down. And if you want to make yourself, what else do we use? We use fibs. Let's just I'm going to grab this. Nope, change my mind. $618 is $31.50. Even if I move the bottom up, it's still $33.05. One level, break one level, find the next, break one level, find the next. When you overlay fibs on top of that very same methodology, where does it put us? It actually puts us breaking the 50 at 618. 50% actually would tag the 50 MA almost to the penny, but 618 is 33.05. Am I saying we're going there? No. What I'm saying is that if we don't hold, then you look for the next level down. This is just how you get down there. If this bounces, then we start to look for the previous wave's high. But I'm spending a little time looking at the downside stuff today because I think everybody needs to be a little more aware of the downside risk, especially now, because I think that we could actually be heading into a period that might get a little sketchy. Right? if we use, I'm going to use YM, which is the contract for the Dow. If I use the Dow, it won't let me use the volume profile. So I'm going to use YM. And this is the daily. Does this chart look like it's kind of found a level up here that it seems unable to get through? Yeah, it does. Right? Go to the weekly and kind of shorten that up a bit. This is a chart for the Dow that I think is it bullish? Yes. Do you trade what's in front of you? Absolutely, but you have to be aware of what's going on around you. And when you throw the 20 and the 50 on this chart, and I think we've talked about this before, that's going to be a draw for price. If when price fades, it will look for the 20 and or the 50. Does that kick off a larger move down? I don't know. But do these markets feel top heavy? Yeah, they do. This is ES. This is the same. This would be the S&P 500. There again, there's your 20 and your 50. Are you trading at somewhat of a premium, I guess? Yeah. And you have to be aware on what's around the corner, right? Sometimes if you're trading those short time frames, you're going to get so hung up on the short time frames that you don't see the larger picture. And you don't want to miss the larger picture, which would be, as an example, where's all the money in the market? NVIDIA, right? And a handful of others. But it's NVIDIA. That's the trade that everybody's in, right? Everybody's in NVIDIA. We really haven't had any sort of a retracement in NVIDIA at all since it kind of took off in April. Now, because we went parabolic like this, what happened? We spread out these MAs, which end up being levels and ranges and draws for price. We know that if we break one level, we'll look for the next. Same rationale applies about all this gray stuff up here in the volume profile, which is not a lot of trading. This is where the density is, in the blue area. So if we start to fade, you have to look for the 50. Now, to some people, that 165, that's going to feel, again, like the sky's falling. At 137, it'll feel like Armageddon. But all that is price just coming back and checking these levels, right? This would be the first touch of the 50, so you might even get a bounce. But this is how you get to these levels. But if this comes undone, if something like this, NVIDIA, comes undone, you have to start to understand what it's going to do to the larger market, and it would be problematic. It really would be. We've looked at Monero a couple times, and I know last week we dropped this trend line up here. This is XRP. I'm sorry. I thought it was Monero. Where is it? There we go. So remember the first time we showed this chart, the first time you saw it, this yellow line was here, and it was just picking up this bench of past price, right? This bench of past price, in all likelihood to me, was going to be relevant in some way, shape, or form. And that's when I drew this line, when I started looking at this chart and saw this. So fast forward to today, and I know we looked at this chart last week as well. Where are we starting to see some resistance on the bounce higher? Right at that level. Current price is attracted to past. It found it in its first attempt of breaking the 20, and it's failing that level. And this is just, again, layering all of these little things together to help you determine and see the ebb and flow. Now, if this fails here, what are we expecting? we're expecting it to come back and perhaps test the previous wave's low. If it comes back to the T line and the 5 EMA and catches a bid, it would no longer be that first attempt in here at the 200 and the 20, and maybe it breaks through. And if it breaks through, it gets into the gap to the upside, which makes it easier to find the 50. It's just a matter of breaking one level and finding the next, right? Dealing with the support and resistance, and then you'll notice that you'll be able to trade in and out of these gaps. And everything is fractal, right? What happened on the weekly? You literally came back and wicked the 50 MA and then bounced. Now, we didn't break trend or anything like that, but you did get a healthy bounce at the very least. What does price probably want? Well, it's still in a downtrend. And if it can't muster up enough energy to push the 5 EMA up, it's still bearish and will still continue to fade, and most likely we'll probably find this level again until enough money comes in to change that scenario. Let's look at Rico's favorite thing, CFX. Now, when you break the 20, what were you expecting to, and I've been trading this thing too. So when you broke the 20, the first thing you're looking for is, wow, this could be a mega short, right? Because look where the 50 is. So this is an example where if you're not looking at the larger time frame and you're just looking at that 15-minute or whatever it is, or short, or God forbid, you're going to miss the bigger picture. Right? This is, everybody wakes up in the morning and you want a runner. Well, here you go. There you go. And when you're only trading a handful of things, you're going to know these charts intimately. And you're not going to be scrambling to figure out what to do. You're going to know what to do because you watch the chart every day and you're familiar with it. And if this was one of the things that you were watching every day, we can see our sell signal on the daily is the 11th of August. You in all likelihood would have been backing that chart up. Let's see what comes up in here. Somewhere in here. So you actually picked it up on the 8th, a couple days before on the 4-hour. So you literally would have been in a few days before yet again on the 4-hour chart to be shorting the daily that ends up turning into a bit of a runner, and you would have known, right? You would have seen this big massive move up, spreading out this range, and this range to you is simply opportunity. Simply opportunity. And yeah, this is something that, unless you break trend here, right, you can stay short. I've been stopped out of the same trade 3 times, but I find ways to re-enter it because it's still, in my opinion, moving south, and it wants the 50. And, beneath the point of control, you always know that there's a gappy area, or above the point of control. So I still feel like we're going to find that somehow. And today, this is perfect. You shot up and you wicked the T line and then you ran away. That's about as bearish a signal as you get. So you don't have to be trading the short time frames in order to make money. You'll probably make more money entering off like we showed on the 4-hour and then getting something that moves like this. This is why we do fractal analysis. If you're looking at the daily, this range to you is opportunity. Right? This is what you're looking at up top here. Right? You know that when you come back to test the 20, if you fail it, you have nowhere to go but south to the 50. This is going to be one of the handful of things that you trade, so you're going to know this. And you're going to be all over it. And you know how to manage this getting stopped out on the shorter time frames if that happens to you on the way there. like it has me. But it doesn't freak me out, because usually I'm stopped out with profit anyways because the trend is down. I'm not worried about it. But if you stay off those shorter time frames, you're going to see this unfold more times than not. And it doesn't matter what you're trading. It can be stocks, could be crypto, could be whatever you want. Now, there's our Bitcoin chart is fading even more, right? And let's see what happens when it gets into this neighborhood down here. Because if it breaks it, we know where it's going to go, right? Or will want to go to. And when you throw the volume profile up and you can scale in all this gray here, that's more unnerving than when you didn't see it, because you understand that that's not a lot to help you hold price up. Now, I know our friend Delatoshi likes to trade ETHFi sometimes, and so do I. It's one of those things I like to chart and just trade from time to time, and it actually doesn't look too different than the chart we just looked at. Big move up. But again, look at the ranges that you create. Right? It's all you have to do are take the signals. Now, let's just take some of this stuff off for a second. Chances are you would have caught this daily signal here on the 4 hour a day or two before. So the 4 hour chart is really, I find, is really, really critical. If you like to sneak in a good entry on the daily, I really like the 4 hour. Yeah, can you shorten it up even further? Sure, but I just find that the 4 hour is a consistent time frame to give me the entries that, I might like. If we look at this, for example, this is the 18th of August. If we slipped into the 4 hour, where do we see it? Is that the same day? Did I say the 18th? Yeah, could have snuck it in at the top. Is that what it was, the 18th? Yep. So we would have been only looking at hours here on this one. But would you rather be in here or down here? And this is the advantage. Every trader needs an edge. And this turns out, in many cases, to be an edge for me. Just giving me those areas that you can get that extra little bit of a head start. Here's the 4 hour Bitcoin chart. That was an obvious top, but there's your safe entry. You get a little bit of choppiness in here, but if you're managing your stops, and again, this is a 4 hour chart, so that's not too crazy. You get another short signal and boom, the price continues to fall. And now how do you manage this? Just switch time frames to get a different look. That's the 12 hour. Does it look a little more organized? Absolutely. Right? This is probably where they got a little craziness was earlier, but on the 12 hour, it's smooth. And that just helps you manage these things. Is price trading on the south side of the T-line in the 5 EMA? Yep, stay in the short. Right? And that longer time frame is the one that's boss. And again, doesn't matter what we're looking at. It does not matter. We looked at this last week, right? Xano. Privacy blockchain. It's had an absolutely phenomenal run, but nothing goes on forever. Right? Nothing goes on forever. And does price look like it might want to maybe pull back a little bit? Yeah, it does. Obviously, to where? Well, that would be a target. That's your upper value range. You break that, you've got a gap all the way to the point of control, which is pretty evident where all that past price is. That's the bench where buyers and sellers have shaken hands in the past. And this is why, as you do more and more analysis, if you were interested in buying this and price took off on you, you're not going to get freaked out by it. You're not going to get upset. You're not going to chase it, because you understand that price does come back. You just have to be patient. That's all. Right? And because we do this, we know what those levels might be where price may want to come back to. So you're going to look to the 20 at $11.10. And if you don't hold the 20, you're going to look to the 50, which is the same neck of the woods that the point of control's in. And of course, failing that, and we'll just use the 20, the 50, and the 200, it sits down here at around $9. And you just have to be patient and analyze the chart as it unfolds. You know, our momentum indicators are telling us that maybe this is going to fade a little bit, making the move back to the 20 more likely. When you get there, you just do another set of analysis. You might be feeling like the momentum down is proving to be too great, and it shows in your other indicators, and you're just going to look and be patient till you get to the next level down, and that might take a day, 2 days, a week, or more. Who knows? It's a process. You get there, you do the same thing all over again. And eventually you're going to want to switch time frames to see if, hey, you know what, maybe there is more downside to the weekly. So 911 is the 50 on the weekly. On the daily, it's in and around the 200. So because we understand fractals, right, we know that $9.11 is a relevant spot on the weekly. That makes this $9.05 or so a relevant target on the daily. But it's just a matter of time and price. You can't rush it, and you can't front run it. You literally just have to wait for your opportunity. And let's say, for example, price gets back around the 200. I'm just being hypothetical, but let's say price gets back around the 200. What are you going to do? You're going to wait for the chart to tell you that it wants to move higher again. Maybe you'll see this, right? You'll see the stochastic RSI open up and the Fisher open up. The 5 EMA go from red to white. You start to see green candles that break resistance. You get a buy signal, and boom, price goes higher, right? It's just rinse and repeat. But it doesn't happen instantly. And I think for a lot of us, it's the time that it takes for these things to unfold that frustrates you, right? That's why I think a lot of us, when I tell you to trade the longer time frames, it's kind of, you know, you roll your eyes because it feels like watching paint dry, and I get it. But the point is to keep you profitable and to keep you safe. But hopefully you can start to understand that these long runs are where you make money, right? Yeah. Can you intertrade these these candles? Some of them will be huge. Yeah, sure you can. But don't count out that greater trend. You could make 6 trades in here, or make 1 trade in here and hold it. Right? And taking less risk because you're not in and out of every trade. That's the way I look at it. Every time I enter a new trade, there's an element of risk that wasn't there in the other one, especially if you're in a good spot. But all of this stuff rinses and repeats, rinses and repeats. Right? This is the WeX. Actually, let me see if I can. What's this? Gate.io. Mexi. This is the FEG chart, right? Now, FEG's always got a lot of wicks on it. We understand that. But directionally, you can see where it's gone, right? Had a little move higher. You faded. You got support from the 50-day moving average. You get a green candle and the price spikes. You know, the pullback came right back to the 200, but it didn't hold, and it looks like it's may or may not tag the 20 in here. If it breaks through, it's going to look to take out the previous way's high. It's no different than any other chart we look at. right? And all of this is just consolidation, and it's just like winding that elastic band if you twist it together from both ends. And ultimately, you want that thing to unwind and let go and spike higher, right? And we know that it happens. We've seen it happen. And when it does, you just start looking, to the left to look for those levels that it may want to revisit, because current price will look for past. Right? In the event of an uptrend or a downtrend, current price will look for past. This is a NASDAQ. We don't, you're looking at the price sitting right on the 200 MA. Or sorry, the 20 MA. This could simply be just another, and this is why people will see candles like this and everybody freaks out. And then the next day it's a solid green candle, and when we talk like this one didn't even exist. So this could just simply be another continuation off of the 20-day moving average. We don't know. We just don't know yet. If it breaks, look for the 50. If it bounces, look for it to take out the previous wave's high. It's as simple or as complicated as that, right? We make it more complicated. Right? Like, God bless X spaces, right? They're great to go in and listen. You can learn a lot from really smart people. But there's also a lot of stuff in there that's completely and totally nonsensical and doesn't make sense at the best of times. And you combine that with things that actually do make sense, and then you just have a whole mess of stuff that you have to sort out. Right? That's why reading price on a chart is incredibly important. Because you don't want to be the person that makes constant. Do you want to be the guy that buys up here? And somebody will be, maybe they don't have a lot of experience in markets. They don't know how to read price on a chart. It's all they listen to is business news and group speak, for a lack of a better explanation. And they go long here, not understanding that, hey, you could be overbought, and that before you know it, price reverses on you, or who knows. But it happens all the time. You don't want to be that person, whether you're a trader or an investor. If you're an investor, you don't want to be the one that buys at the top, do you? No, of course not. That's why we're here. Just to learn how to read price on a chart, to see when it's overextended to the upside and overextended to the downside. I keep coming back to the Bitcoin chart because it gets heavier and heavier the longer we're in here. So this level that we've popped on here a while back looks like it might get revisited along with the 20 MA. So we know that if this rolls over, we're going to look for the 20 as a target. It's already kind of in line with what we've drawn in there before. And what happens if it breaks? You look to the 50 and so on and so on and so on. If it bounces, well then we know what happens there too. You start to look for the previous wave's high. Let's go to the Qs. You can see the support off the 20, off the 50, off the 200. This thing's got a lot of love for a long time. But is the horse a little far from the barn? Yeah. Right? That's a huge kind of gap there. Price doesn't like to be too far away from areas where it can ground itself, like the 20 here. So, as price gets too hot, you have to look for those pullbacks. Is the sky falling to get back to the 20? It might feel like it, but no, it's just coming back to a respectable level on this time frame. Could it be the start of a greater pullback? Sure it could. But, until we get here, that's really all we're dealing with. So, if you understand the way price moves, it doesn't surprise you and it doesn't scare you. Which is really, really, really key. Because if anything's going to freak you out, it's going to be what you don't know and don't understand. right? Now, does anybody have any questions today? Because today's a good day to probably ask them. Or you want us to look at a chart, we can do that too. Anyone? Because if we don't have any charts to look at today, I can shut this down and we can come back on Thursday and see where we're at. But this is a good day just to remember to keep things simple. It's not the days to be doing complicated options trades unless you're a professional, right? This is a real simple way to stay out of trouble, right? Follow the T line. Don't let price get too far away from it, right? Stay on the right track. Follow the yellow brick road. Right? All of this stuff is very doable. You know when price rolls over. And remember that you can't hope yourself into a good position, right? It's just not possible, right? If you remember a few things, a lot of the stuff I learned about the T line is from a gentleman by the name of Stephen Bigelow, who kind of was, I guess, one of my mentors along with David Steele Smith Elliott. And if you go on YouTube and search Stephen Bigelow, there's all kinds of his videos there. And unfortunately, he's passed away, but his work is still available. And he has a way of keeping things simple that I think you would all appreciate. But, one of his beliefs is that understanding the T line should be one of your kind of core competencies, right? Combining that with major moving averages like the 50-day moving average and the 200-day moving average, because they're, quite often followed by institutional investors and they become relevant. And learn how to spot pattern breakouts, right? So sometimes we talk about, that flat bottom that looks like a frying pan, right? Well, learn how to identify those. Learn how to identify the bowls, right? Where you've got the kind of the egg shape at the bottom where you can see price moving down and then slowly rolling up. These are all patterns that are easily identifiable. And when you combine them with things like the T line, things like major moving averages, you're going to find that you'll stay out of trouble more often than not. One of the things that we use in here is a stochastic RSI. And the reason I like the stochastic RSI is because it gives me the ability to see these kind of overbought areas in the extreme. Right? I tend to look for those. I want to buy and sell in and around those areas when price is overbought or oversold. Right? And I use them with the Fisher transform and the MACD. And there's a particular setup that I like. And we talk about trading less but making better trades. One of the setups that I look for is where the stochastic RSI, let me blow this up a little bit. The stochastic RSI is really, really oversold, and so is the Fisher. I worry about the MACD less, but these two I pay particular attention to because they'll go first and second typically. When I see that divergence from this oversold area, and I start to see these green candles in that kind of that bowl effect that we actually just spoke about, that's something that I like. And I will look for setups where I see exactly this. And price wanting to do that, well, you have support of a major moving average, right? And then price moves higher. And then lastly, was our moving average and signal line above zero on our MACD? Yes, that's giving us an indication that, hey, maybe something more bullish can happen here as opposed to bearish. And that's exactly what did happen. And then once you're in the trade, you just let yourself get guided through it. Is this divergence in place? Yes, you can stay in the trade. And if you take the time to listen to some of Steven's videos, you're going to find that his analysis is going to be probably just as simple, right? The way that he talks about the T line, the 50, the 200, in certain patterns, that's all you have to do, right? This is the perfect time for people to get caught up in a lot of nonsense that they see and they hear in the market. Just follow the chart. Just follow the chart. It's going to tell you everything that you need to know. It's going to show you where money has been and where money has not been. And then our methodology kicks in where we just trade that, right? What are we looking to do up here? Well, this is a short opportunity. We're going to look to the 20 and so on and so on. That's it. We're just going to follow the chart, people. No matter how scary it might seem, we understand that these are just levels. And because we push them ourselves higher, at one point in time, we have to come back and deal with them on the downside. It's not a get out of jail free card every time you go higher. There's, minus or retrace. That's not how it works. The more velocity you get to the upside, the potential for the retrace to feel uncomfortable is that much greater. If the bullishness continues, then you just keep getting continuations off major moving averages or structural levels. Right? We don't have to make this any more complicated than it already is. Right? It's already complicated. We don't need to make it more complicated. Right? Price, this is oil, just another futures chart of oil. Price is telling us what it wants to do. It's been pretty clear on that the whole time. We can't break through this particular trend level. We keep failing major moving averages to the downside. Well, we just have to follow the chart, right? Will oil be a great trade to the upside one day? Yeah, it will. It's just not today. Just not today. And it wasn't yesterday or the day before that or the day before that or the month before that. And that's the hard part for people, right? Nobody wants to hear that price is going to continue to fall. Because while this was going on, everybody was telling you that, or not everybody, a lot of people were telling you that, hey, I see $80 oil again. No, the chart's not saying that. And it's the chart that tells us everything we need to know. And it doesn't matter what you're trading, whether you're trading Bitcoin or whether you're trading oil or whether you're trading stocks. It doesn't matter. The chart's going to tell you. And this is going to be a great opportunity for us to come back in a couple days to see what we tagged. Hey, maybe we just get back to the 100 here. There's a little bit of structural support in that area. Maybe we hold. If we don't, we know where we're going. And that's why this isn't a surprise. Right? Nobody trading the stock market should tell you when it fades that they're surprised that it happened. Right? This is a great opportunity for you to see the levels that you would potentially check on the way down. First thing you do is the 20, the 50, 100, 200. It's all there to see. Okay? So try and keep your charts clean. Start with the most simplest form of analysis you can find. And then to validate what you believe you see going on that time frame, that's when you can start to overlay your other indicators such as the volume profile, some major moving averages, and so on, right? Once you start to layer on those averages, you're going to see the levels that you may come back and tag. It's not rocket science. It's just repetition, right? That's kind of all this is. Just a lot of repetition. As we're sitting here, this daily candle seems like it's really hunting for that low. And because we've done this more than once, hey, that would be a target for us, right? We would be looking to see if we're short. Oh, let's see what happens when we get down to that previous wave's low. We don't hold it, then this thing's going to fall even farther, and then you start looking for those other levels. And those other levels is all you start to do is flip on again some of those major moving averages that will help you determine where price may want to go. All right. Any questions, guys, or things that you want to have us take a quick look at while we're here? This is your chance. I think we covered XRP. Did we miss any? Solana, right? Solana's daily chart. Here we are kind of getting that double toppy type of look where at a point of which would be resistance, that upper value range, right? Somebody doesn't know, the market doesn't want to take price above that level. They're not comfortable with it. Where does it fade to? Right back to the 20. That's where you sit now. And if you don't hold the 20, you're looking for the 50 and so on and so on and so on. And the problem is for Solana, unfortunately, is that you've got the point of control here, obviously the 20, the 50 down here, and the 200 beneath it, and this gap. So, if you start to slip into this range and you start to fall into this gap, you can see how price could erode and find that lower level. And this is how you set your targets. And of course, roll back your time frames where you can. Anything else you guys want to look at? Let's look at SHIB. So what do you see? This, the 200 failure here at this level is pretty key. And this has been a series of tests and failures, right? And these failures come, this one's kind of in purgatory, but these failures come at pretty predictable places. Right? Break the 20, fade to the 50, sideways, look at, you can't break the T line, what happens? All that divergence is still open, price fades. Get a shot up to the 20, you get some signals in here, but the 20, it's your first touch, so that's a failure, or more likely to fail, which it does. There's your second attempt at the 20, this one breaks, right? This one actually goes through the 50 and the 200 right away and then reverses hard. What are we looking to do in here after failing the 200? Probably take out this wave's low and look for the lower value range, right? Doesn't matter what the indicator or what the asset is, everything that we're talking about still applies. Doge, very similar chart. Now we're failing the 20 and the 50. So yesterday we wicked the 20. Today you break it and you're basically sitting on the 50. And if you break that, what do you think you're going to look for? Maybe the 200, and if you don't hold, you're going to look to take out the previous wave's low. And it's just a rinse and repeat scenario. Doesn't matter what you look, what the asset is. It just doesn't matter. Here's Tesla. That's what I was looking for. What's holding Tesla up? Well, basically everything right now. It's sitting on the 200 with the 20 and the 50 in here. So if it doesn't hold it, it's going to, if it holds it, it's going to pop. If it doesn't, I don't like, the weekly's still bullish, but it's kind of choppy, isn't it? And it doesn't really seem to want to go anywhere here. And I don't like this daily chart actually at all, because daily candles failing the T line, failing the 5 EMA, sitting on the 200, failing the point of control, tried to break out, right? Look at the upper value range. You've tried to break out and it's just a no-go. So it'll take a little bit of a gas up in order to try again. No pun intended. Oh boy, here we go. We talked about these charts before, right? If you want to get your heart broken, these things are a way to do it. These are the charts that everyone wants to swing for the fences for, and this is Tilray. And I think the weekly does it better justice, right? So this has been dead money for a long time. I think there's traders in here maybe trying to make a buck, and hoping they actually get lucky as well. But eventually this stuff just seems to come back and retrace themselves. It's a tough thing to buy for me as if I was a fundamentalist, because I don't see a path of profitability. And as a trader, I just don't like the chart. There was money made in here, yeah, but how long it can be made, who knows? These things have broken many hearts. CGC is another one. Same, it'll look roughly the same. This looks like it might want to roll over and take out the previous wave's low, and so on and so on. It's just a bad movie, in my opinion. But nevertheless, United Healthcare, that's what we didn't look at. So let's look at the weekly. So the big move down, all this divergence. Do we have a buy signal yet on the weekly chart? No, we don't, which is kind of interesting. If we fade this, what happens? We roll over, we potentially take out the previous wave's low. Now this got all kinds of attention because I think Berkshire Hathaway's is taken a stake, and so there's positive news in that sense, and it's representative on the chart, right? But there still has a lot of work to do. It doesn't really want to go anywhere past the point of control on the daily. And is it trading a little bit hot? Is it trading above the 20 and the 50? Is there a bit of a space there, that gap we talk about? Yeah. Price may want to come back and tuck itself in here for a little bit. If it doesn't avoid this gap, then you can fall into it, pulling price down. Now there will be people that believe that because Buffett bought this, that it'll never go down ever again. Maybe they're right, but probably not. Right? Nothing goes straight up or down. Okay. Let's look at gold. That's a heck of a lot of consolidation, right? I'm sorry about this is the volume profile that kicks on, but if gold rolls over here, right? So here's your move up. Doji candle at the top of this uptrend points out, so that's a little bit of a signal for us. But if we continue to roll over, you broke the 20 and the 50 in here. If you continue to roll over, what are you going to do? You're going to look to take out the previous wave's low, or you're going to find a structural level or somewhere to sit on. But we see this on every time frame on different assets, so that you can understand that this just continues to be a real meaningful way to read price. If this was to move higher, then we know it's going to take out the previous wave's high. And if we look to the weekly, basically what are we doing? We're trying to hang on to the 20 MA on the weekly, right? You did it here and you got a continuation as well as here, even back here. Right? But you don't hold this, you break it, you're going to look to the 20. That's all. Again, doesn't mean that gold's not a good asset or anything like that. It's just how price moves. And when you understand the ebb and flow of how price moves, you're less likely to be surprised, less likely to be reactive, and less likely to make a mistake or make the trade that you wish you didn't make at a later date. Okay. So we'll kind of leave it, we'll leave it here for now, and we will come back on, unless there's any questions, we'll come back on Thursday at 12 o'clock and pick her up where we left off. Okay, guys? So until Thursday, have a great week, and we will talk to you soon. Bye for now.